Welcome to the Financial Armor Show. I'm your co-host, Tony Shore. I'm here with our host, a very special host today, Jose Rodriguez. Jose, how are you?
I'm doing fantastic. I'm so excited to have my first radio show here.
Yeah, Brad, I can't believe you bumped Brad out of the chair there this week.
Gotta get a young face in here.
Yeah, really get that old timer out of there. That's awesome. No, I think it's great. And Brad is so proud of what you've been doing there for the team at Cooper Financial. So, Jose, glad to have you hosting this week. And wow, for your first ever hosting the radio show and the podcast for the first time ever, you've got a huge guest too. This I can't believe. And we'll get to that in a minute. But first, Jose, how have you been doing? What's going on with you?
I've been great. A lot of things going on right now. Obviously, business has been amazing, and
Good.
just taking it all in, learning every day. It's
Good.
amazing.
Yeah, I know you guys have been really busy there. You've got such a great team. And I know Brad's really busy, so I'm glad you were able to co-host the show for him today. Now, let's get right to business, I think, because this is huge. It's a huge get. We've got a great guest on the show today. Tell us about our special guest today, Jose.
Yes, our special host today is Tyler Ellegard. He's a portfolio manager at Gradient. I got a chance to meet him over at Minnesota a couple of weeks ago, and I was just very impressed with what he has done with a particular portfolio that has caught a lot of attention from our clients and also just from myself as an investor, or also just as a person that just likes to know things and learn about things. And that portfolio is the digital discovery.
Oh, wow. Wow, that sounds like an interesting one. I haven't heard a lot about the digital discovery portfolio, so I'm looking forward to learning more about this.
Yeah, it really caught my attention, not because last year, and not to say that this is going to happen again, who knows, but last year did 106% rate of return, which was insane.
That is crazy. I don't know if I've ever heard that for a portfolio. I mean, I've heard some bragging numbers on the G50 and some other gradient investment portfolios when they've had really good years. And I know on average, they really do well if you look over the past years. But in 1 year to have that much growth, that is crazy. There must be some NVIDIA stock in there or something. I'm throwing out a guess, but Jose, yeah, introduce our guests, bring them on.
Yeah, Ellegard, Mr. Ellegard, welcome to the show.
Yeah,
how you doing?
Good. Thanks for having me. I'm excited to be here and talk about such a fun portfolio. So
right. It's going to catch a lot of attention for sure, because it's a big talk of the town, even in just Wall Street, right?
Yes. And I don't know if you want me to kind of dive into the main segments of it, and then we can kind of talk about why it's such a big discussion topic for Wall Street right now. And I think beyond Wall Street, I think just more in general too. It's more of a talking point for one specific asset, but there's other areas that tie into this one specific spot. So
right. And I want you to start first by telling me, in your crayon eating terms, what is this digital discovery portfolio?
Yeah, so the digital discovery portfolio, it came about, let's see, about March of 2022. Cryptocurrency prices were obviously soaring. There's a lot of discussion on financial news networks, and there's just a lot of inquiries about how can we get invested in something like this, right? So we decided to launch what we call our digital discovery portfolio, but we took a little bit broader approach than just specifically tailoring it to cryptocurrencies, because sometimes these things can come and go. Not that cryptocurrencies are, but there are things that we often talk about that gain popularity, and then all of a sudden 1, 2, 3 years down the road, they are no longer a fad and nobody really wants to invest in it. So we decided to take a little bit broader approach with the portfolio and focus it more towards the evolution of technology, right? What is the next thing that's going to change the landscape, right?
Mm.
So obviously back in 2000s, we had the dot-com era, right? Everybody knows the internet, pretty big deal, right? So that's kind of what we're looking for in this type of portfolio. You can throw AI in there, you can throw cryptocurrencies in there, even the metaverse, right? So we've really tailored the portfolio around all of those segments, and we can add more as new technologies come up. So, for example, when we first launched this portfolio, AI wasn't part of it because AI really wasn't a discussion at that point when we launched. Now, shortly thereafter, AI became a discussion point and became a much more useful and use case technology. And there was an investable universe for it for us to get invested into. So shortly after, we added it as a pillar. So taking a step back here, we have five main pillars right now of the portfolio. Number one is blockchain, and we can get into that in a little bit. Cryptocurrencies is the second. Third is metaverse. Fourth, and it's not really a huge component of the portfolio right now, but NFTs, and that we can talk about the broader use case and whatnot of those. And then the fifth is AI, right? So the portfolio is much more diversified than saying we're just going to invest and bet on this one cryptocurrency or these two. We're focusing more on the companies that are investing in the infrastructure of these technologies. So, for example, right now we don't have any direct crypto exposure, but we have cryptocurrency companies or companies that are, Coinbase, for example, is an infrastructure, right? It's a trading platform for cryptocurrencies, right? So that is part of the portfolio. And that's what we're focusing the portfolio on is the companies that create the value of these technologies, right? So if you start to dig into like cryptocurrencies, for example, yeah, you could bet on one, two, or three coins, but that's going to be extremely volatile over time. And you don't know which one is going to survive because there are thousands and thousands of them out there right now. But we know that Coinbase is one of the largest and pretty much the only publicly traded trading platform for cryptocurrencies. So that's probably going to be around for a while, right? Yes, there's going to be volatility because, when cryptocurrencies hit the mainstream more and more, there's going to be more trading volume. And when it comes out of the mainstream a little bit, like it did in 2022, there's less volume, trading volume. And so the company's going to fluctuate with that because the more trading, the more revenue they generate, right? So that's the kind of thing that we're focusing on in this portfolio is the fundamentals and the companies that are actually creating value for shareholders rather than betting on a few coins here and there. So that's kind of the gist of the portfolio. And like you said, it did really well last year, has done okay so far this year. At one point, it was up pretty dramatically and has pulled back, unfortunately. But that's the nature of the game with these technologies is because they're relatively new, they're relatively nascent. So there's not a lot of understanding, and it's more of a risk play or people bet on certain things, if you will.
So it's high risk, high reward,
Yes,
though.
yes, very
Obviously,
much
we
so.
saw the reward last year.
Yes.
And people who have a lot of time for their money, right? Am I right on that?
Yeah, and as an example, like February, we were down 15% in just 1 month.
Yep.
Right.
That's
So
huge. Yeah.
there's a lot of, and then the next month was up 22, right? So there's just a lot of flux.
Goes from bear to bull
really quickly.
a month.
Yes. And weeks.
Yeah.
In a matter of fact. So
Yeah.
very high risk.
I've had some clients, and their 60s, have a small portion of their portfolio in it just because they thought it was fun, right? And they saw how well it did last year, and they're like, "Oh, let me put all my money in there." I was like, "Whoa, whoa, whoa.
No, you don't want to you can't put the entire nest egg in there.
No.
Right, exactly. But I wanted to essentially recap because now that I'm understanding a little bit more, even more detail, it's not so much about, we're investing in blockchain, crypto, or metaverse or AI. We're investing in what's next in technology overall. Because maybe in 5 years, there could be a new technological advancement that now you're tapping into and we're investing into. Is that
Exactly.
a fair thing to say?
Yep, exactly.
All right.
So, can I interject a question because this is interesting to me? I didn't know a lot about this, but so I made a joke about NVIDIA because I thought, oh, I was thinking technology, but this is digital. So you are investing in companies that are involved with blockchain and cryptocurrency, but not directly,
Not directly. Yep.
and that's good. But NVIDIA, does that creep in on the AI side? Are there companies like that?
Yes, for
Okay.
sure. So the one thing I will say is we're not investing directly in individual stocks. We're using ETFs to give
Sure.
us a little bit more diversification, right? Rather than saying this stock is the one to own, we're owning 50 in that space, right? It gives us some added diversification, reduce the overall volatility or somewhat volatility.
Sure.
So it's not a direct investment, but for example, NVIDIA is in some of the ETFs that we do own because
sure.
they're the GPU, the processing unit that powers the computers for AI. So NVIDIA is in the portfolio.
Oh, they're
within an
very
ETF.
involved in AI. I
Yes.
mean,
They're
yeah,
always going to be in the conversation for
yeah,
sure.
yeah. I think they've established themselves
Yes.
as being a part of that for sure. That's interesting. I was just curious about that.
Yeah. Yep.
Because nowadays, I mean, you can't look at CNBC
And not hear about it.
and not hear about
Yeah.
NVIDIA and AI. And so and crypto, I'm always amazed, like you said the word fad. And I'm always amazed at, my son really wanted to get in. I'm like, whoa, wait.
Yep.
And, a lot of people did make some money, but to be directly in cryptocurrency is, that's beyond high risk. That's like
Yeah.
putting the nest egg on red or something.
Well, and I think it depends on the actual currency that you're choosing.
True.
Right. So there, I mean, like I said, there's thousands of them that are out there.
Yeah.
The two main ones are your Bitcoin and Ethereum. And
Yep.
if you're investing in those, obviously there is going to be some volatility involved no matter what
Sure.
you're doing. But probably less so than some of the even smaller coins. So Bitcoin and Ethereum, two different types of coins. Bitcoin is kind of dubbed the digital gold, right? It's kind of that store of value. Whereas Ethereum is more smart contract, more use cases behind Ethereum. So, the more you can dig into these names or these currencies and understand the blockchain that's behind them, because blockchain and crypto are synonymous, they kind of go together. The more that you can understand the use cases of the blockchain behind that cryptocurrency, the better off you are investing in those. So that's the other reason is investing in the companies gives us a better fundamental understanding of the companies rather than trying to dig into the thousands of different coins specifically.
Wow. And Jose, I think it's impressive that you've brought this along to and work alongside Gradient Investments and Tyler here to bring this opportunity to your client base and to stay ahead of the game, or at least on top of what's happening. I mean, it's a lot of financial advisors that I've talked to are like, they're kind of old school. You know what I mean? They're still talking about let's get you in the top 50 in Apple and Google and where's General Electric? It's like IBM. It's like so you want to make sure you're working with somebody who has their finger on the pulse. But isn't going to jump at a fad. And this sounds like a perfect solution, doesn't it, Jose?
Right. Yeah. It's been very, very nice to have the opportunity to add that value to clients, because that is something clients are always talking about it because they see it on CNBC. They're always asking, how can I get in on this in a safe way where, it doesn't safe by safe. I mean, it's not reckless.
Right.
And having the ability to say, hey, we have this, and it's a great option if you wanted to go a little bit more of aggressive route and you have some exposure in something that is brand new to the tech industry.
Yeah, that's
Sure.
awesome.
Yeah, and I think this is also one of those portfolios that it's not something that's going to make up a significant portion of your allocation, right? Our recommendation is if you do want to invest, obviously there is a lot of risk involved. And so our recommendation is, maybe around 5% of your total investable allocation, right? Because it's not going to make or break your retirement plan. And then it's also one of those portfolios that you kind of just have to set it aside and not pay attention to it on a daily basis, because you are going to see significant price fluctuations.
Yeah.
And, obviously people love looking at their investment accounts on a
Oh,
daily
yeah.
basis, like to see how am I doing today? And this is a hard one to look at on a daily basis. Obviously, days that it's up 6% or 5% or 4%, it's fantastic.
At the end of the year, last year, it was a great time. I
Yeah.
mean, if it's up 106% or whatever it was,
Yep.
I mean, then people are going to start looking at it more and more frequently. But what they don't realize is, past performance is not a guarantee
Exactly,
of
yep.
future results. However, when something is hot like that, it has the potential to go up and back down, but back up again. And that's it's those backup periods. But
Yes.
when you say, like, when you guys talk about, Jose, when you talk about percentages of what your clients would put into this particular portfolio, and I know you mentioned like 5%, that depends on your time horizon, right?
100%.
If I'm 1 year into retirement, or I'm retiring this year, I don't want as much of my money in something like that than if I am 40 years old or 50 or even 55.
Yeah.
If I'm not going to retire till I'm 70 and I'm 55 or 60, I can have a higher percentage in something like this, or probably should. Is that right, Jose? Would you say that?
Yeah, for sure. Usually what I've been seeing is, so there's some clients that like to do their own trading. Now with these apps and the accessibility of trading on your own with E-Trade, Robinhood and all those apps, a lot of people, even people that are in their 50s, 60s, still want to do their own trading with those apps. And sometimes they have that play around money, right? And that's fine. And that they usually encourage that. But usually when they say play around money, I like to offer, hey, this is and they are usually investing something interesting, not necessarily safe, and it's not really part of their overall plan. But I say, hey, this is something interesting. What do you think about it?
Yeah.
And then they usually like to have some exposure to AI, because they're already most likely doing it on their own. They're probably buying NVIDIA or some kind of Intel or things like that already.
Sure. But if they're doing it on their own, sometimes it's too late. Like they've started, you started this portfolio up and you got in on the ground floor, but I know you don't encourage people to do it on their own typically. I mean, unless they're very wealthy and have a chunk of money that they can just play with, right? It's like
Exactly.
if you go to Vegas, I'm not a gambler, so but I would maybe go in there, I'm not willing to gamble more than X amount, and then that's my fun money, and when it's gone, it's gone. Yeah.
Right.
Or if I'm up a certain amount, then I stop.
Yeah.
Right. So but I know that you have to first have your expenses know you have enough to cover your expenses for as long as you'll live in retirement. Then after that, you figure out that amount, then that's the play money, right?
Right. That's usually how it's been. How with the clients that we deal with, that we don't really take it into account into their planning portfolio at all, because we're not looking to gamble, right?
Yeah. But if they want to
That
play
kind of
around
money.
with it, that's fine. But this portfolio offers people to make it a part of their actual plan and get some of that reward, especially if they have the time. I like that.
Well, the other thing too to think about is maybe not just play money, but a lot of times when we talk to clients about this type of portfolio and this type of asset, they say my son or my daughter was talking about this. I'm curious, how can I get involved? How can I set aside a small portion for them to get involved, or even grandson, granddaughter, right? That's been a lot of the conversation we've had is someone who said the younger generation has been talking about this with me, and I'm curious how I can invest and maybe leave this as a legacy for my son,
That's a
daughter,
great
grandson,
idea.
granddaughter, right? Because
Right.
the whole point is they're not going to touch it for 10, 15, 20 years.
Right.
And so hopefully, this becomes a more mainstream technology. Obviously, AI is becoming, but like cryptocurrencies, maybe it becomes even more mainstream. You can actually start buying more stuff with it.
Yeah.
And so that longer runway for these technologies is what they're really looking for, is saying, I don't care about it for the next 5 years, but I'm going to set this small portion aside for my grandson. Right. That's kind of some of the conversations
That's
too
a
that we've
great
had.
idea.
Yeah.
And for leaving a legacy, that's a great idea because there's more time until
Yep.
they will actually need that money themselves. It can stay in this and earn along the way. And I want to clarify, I wasn't talking about when we were talking about play money, that's the money that clients do on their own with their
Yep.
own apps. That's not the portfolios that Jose's working with as part of their overall financial plan with Gradient. This can be a part of that overall financial plan, this portfolio. But the difference is when you're doing it on your own, you don't have the same, like you said, there will be new things moving in and
Yep.
out of that. And Jose, you made that point. Like, that's what you like about this is there are people in the know on top of it actively managing these funds and looking at them on a daily basis. Whereas you doing that, you don't have the knowledge base and the track record that Gradient Investments with, $5-6 billion under management does, right?
Right. And the time that you would
Yeah.
need to invest onto tracking all of these 100%. But I wanted to, because now that we're talking about you brought up the cryptocurrency, Tyler. Uh, there's always talking about where's this cryptocurrency and this blockchain technology, where's this all going? What is the actual potential of it? Because a lot of it are non-believers of oh, it's never going to be a thing, or there's some people that are, oh yeah, it's going to become part of our society and our government even. What do you think?
Yeah, no, one of the best examples that I heard someone use, and it was actually our chief distribution officer, Brian Lucius, used this, and he walks through these sequence of questions, right? And he says, when you get paid, you get every other week you get a paycheck, right? Do you get paid in cash or does it go straight into your bank account? Most people say it goes into the bank account, right? So you don't actually see physical cash. Then he goes down the line and says, okay, well, how do you pay for things? Do you use a credit card or do you use cash? Right? There's no physical transfer of money. It's all digitally already. Right? So in effect, we're already using digital currency.
Yeah.
Just that there's a paper backing it. Right? So in effect, we're already using it. There's also the central bank is already doing test cases on a central bank digital currency. That's already in play, right? So it's not a matter of if, it's a matter of when, okay? So when we start talking about cryptocurrencies and blockchain, they go together, right? So in order for blockchain to exist, well, I'll take a step back. Blockchain is effectively a digital ledger, right? It records every transaction, it records every payment, it records every order, and it cannot be altered. And you might say, well, how can it not be altered? There's plenty of people that are out there trying to hack computers. They can certainly try to hack the blockchain. Well, the purpose of blockchain is it's a ledger that's distributed to everybody on the network. So everybody has a copy of the same ledger. So for you, let's say Tony tries to come in and change the order that he made or someone made to make it look like something different, he would have to change it on every single other computer simultaneously. So that's a pretty challenging thing to do, right? So that's the secureness of the blockchain. Who's on the network? Well, there's computers on the network. You put together a very fast thinking computer. They go through and verify transactions. And in order to do that, they want to get paid effectively, right? Just like you don't go to the office to not get paid, right? It's not charity, right? You're there to do a job. These computers are on the network doing a job. So when they complete a transaction, when they verify a transaction and complete a block, they get paid in cryptocurrencies. Makes sense? So it kind of wraps together. So I think the blockchain is, and part of it, people have started to use Bitcoin and some of these other, because they don't trust central government. That's kind of where it started. Bitcoin started after the 2008 financial crisis because they didn't trust banks anymore. So they wanted to create a system where there's not one person controlling everything, right? I think it's grown a little bit beyond that now. And I think the use case of these Bitcoin's a little bit different than Ethereum, and all of these cryptocurrencies and blockchains have something a little bit different to each of them. But I think generally speaking, the technology itself is extremely important going forward, right? And we're starting to see it in a broader use case, supply chain management. I think eventually like a healthcare would be a good spot for it, to record all of your health things that are going on. So there's a wider use case than just financial transactions, and trading cryptocurrencies. So I think the runway for it is quite long, but again, these things take a long time to get into mainstream. A good example of that is like Airbnb started in 2008 and really didn't get traction until 2020. So these things just take time and years, as far as time, to really take hold into our normal daily lives.
I see. Yeah, wow, that's very interesting. I didn't even think about all the other ways that blockchain could be used, because I was thinking of very closed-minded as like, oh, only on cryptocurrency, and if cryptocurrency doesn't work, well, blockchains just go out the window.
Yeah. Well, I think most people relate it to just financial stuff to begin with, and I think that's important too. And these transactions happen instantly, right? And so one, I think, big use case is, from trading stocks, we're going to trade day plus one for settlement.
Hmm.
Theoretically, you could have it be just like you buying a straight up Bitcoin is it settles that same time, right? There's no day or 2 days in between your trading and the actual settlement of the cash. It happens instantaneously. Or financial transactions, right? So you send something. Venmo is a good example of that, right? You send real
Hmm.
time. It doesn't take 2 days for it to settle in your bank. Things like that is a broader use case going forward.
Wow. Fascinating. So what's the name of the portfolio once again?
Digital Discovery.
Digital Discovery. And Jose, for our listeners out there, this is a part of what you offer when it comes to your wealth management and financial planning. Let our listeners know how they can get a hold of you.
Yeah, you can give us a call at 888-390-5277 or go to our website, cooperfinancial.com, and schedule your first appointment.
All right. Well, guys, great show. Unfortunately, we're out of time. That just flew by. That really flew by. I was surprised. I thought we were going to have trouble filling the time, but I shouldn't have talked so much. We can edit me out. That's fine. Mitchell, anyway, our producer. All right, guys. Well, great show. Listeners, thanks for tuning in. Thanks for listening. Thanks for viewing. Again, pick up the phone. Give Jose a call at Cooper Financial. What's that number one more time?
888-390-5277.
All right. And that does it for today's episode of the Financial Armor Show with our host, Jose Rodriguez.